Why are equities increasing in price while we see this turmoil in the bond market?
I would say that investors should consider equities from two perspectives. One is the valuation, the price that they are prepared to pay to participate in future profits, and secondly, the profits themselves. Now, on the question of the valuation, an earnings yield or a free cash flow yield, so the pricing of an equity, is inevitably linked to the bond market progress. So the lower yields go, in principle, the more people should be prepared to pay to participate in equity profits. And that then leads on to the question of, can equity in an environment of low growth, consistent with low yields, actually deliver the profits growth to justify those prices? And this is where I think the market risks are really very significant, because companies that come to the table with less strong profits than the market has anticipated will be badly punished. And so my admonition to investors is to stick with quality and stick with long-term secular growth.
Another image of the turmoil in the fixed income market. This is the German 10-year back to reunification. Down we go. 2016 negative yields, and we've rolled over to ever negative yields. Within this, James, is the idea of dividend growth as a proxy for yield. Do you buy the idea? I mean, a consumer company with a dividend, is that dividend growth a yield proxy?
I think that if dividends are able to grow, investors should understand whether that is at the expense of long-term growth. And therefore, I'm much more interested in free cash flow being earnings less the cost of keeping the company running. And I worry that there are a number of high-yield companies that actually are paying a high yield because they are going nowhere, if not they are going backwards. And those are the value traps investors should be oh so wary of. Plenty of those in segments of the market, such as telecommunications, sorts of companies I'm much more interested in are perhaps lower yielding. LVMH, for example, a yield of less than 2%, but able to grow that distribution substantially over time.
What kind of telecoms? European telecoms, US telecoms?
Well, I think global telecoms generally are in trouble. I look at AT&T, for example. It's a company that many high-yield investors said that's where we want to plonk our money. I worry about the cost of the rollover of debt in due course. If there's any move up, AT&T is going to be very significantly stretched in terms of its free cash flow.